This is Retirement News Online. I'm Scott Drake. With proper retirement planning also comes tax planning. And the goal, obviously, and when planning for retirement, is to keep your taxes as low as possible. Here to talk about that is my guest, Steve Hazel in Tempe, Arizona. Steve, why don't we begin by talking about how different retirement plans are taxed?
Thank you, Scott. So different retirement plans, depending on whether you pay your taxes before or after, they'll be taxed differently. So a Roth IRA, for example, you pay your taxes today, but you never pay taxes again. So all of your contributions plus earnings come out tax-free. If you look at your tax-deferred accounts, like a traditional IRA, 401k, 403b, those accounts are taxed later. So you don't pay taxes today, so you reduce your tax bill today, but it comes time to pay the piper at some point in time, and you will pay taxes when you take money out in retirement.
So one aspect of an IRA is the required minimum distribution, or how the government gets paid back. Talk about that.
Right, Scott. An RMD, or required minimum distribution, is at age 70 and a half on any account that you have not paid taxes on. You're required to take a certain percentage of that balance every year, and that percentage goes up every year in retirement. So it's important to do some planning around how you're going to take those distributions from your tax-deferred account, because not doing that planning can push you into a higher tax bracket and make you pay more taxes than you absolutely have to.
Well, Steve, finally, talk about some strategies you typically use to reduce taxes in some of these situations.
Yeah, certainly there are strategies that you can employ, and each strategy is independent of the person who actually needs it. But one of the things that you really should consider is how and when you take your Social Security, as well as looking for opportunities for Roth conversions when you can fill up those first two tax brackets, that are lowest tax brackets possible, to have some tax-free income in the future when you're going to need more income, and reduce the future RMDs so that you're reducing your overall taxes. Because if we can lower your overall taxes, we can make your assets last much longer.
Great, Steve. Thank you so much.
Thank you, Scott.
My guest has been Steve Hazel in Tempe, Arizona, and you're watching Retirement News Online.